Welcome back to Financial Works, the channel where we help you make money online with simple and effective strategies. In this video, I'm going to talk about one of the most powerful ways to generate income online: portfolio income. I'll explain what it is, how it works, and how you can increase it and leverage it for financial success. By the end of this video, you'll have a better understanding of how to make money online with portfolio income, and why it's a crucial tool for building wealth. But before we get into that, make sure you hit the subscribe button and the bell icon to get notified whenever we post new videos on how to make money online. And if you find this video helpful, please give it a thumbs up and leave a comment below. Alright, let's get started. Portfolio income is any money that you make from your investments. It includes dividends, interest, royalties, and capital gains. For example, if you buy some shares of a company, and they pay you a dividend every quarter, or if you sell them for a higher price than you bought them, you're making portfolio income. You're using your money to make more money. The main advantage of portfolio income is that it's scalable and flexible. You can invest as much or as little as you want, and you can choose from a variety of options and strategies. You can also make money without working, as your investments generate income for you automatically. You can also benefit from compounding, which is when your income grows exponentially over time. The main disadvantage of portfolio income is that it's risky and unpredictable. You can lose money as well as make money, depending on the market conditions and your investment decisions. You also have to deal with fees, taxes, and regulations that affect your returns. And you need to have some capital, knowledge, and patience to start investing and make portfolio income. So, how can you increase your portfolio income and make more money from your investments? Well, there are a few ways to do that. Here are some of the best ones. 1. Diversify your portfolio and invest in different types of assets, such as stocks, bonds, real estate, or cryptocurrencies. 1. Diversification is the practice of spreading your money across different asset classes, sectors, industries, or markets, to reduce your risk and increase your return. 1. By diversifying your portfolio, you can take advantage of the different performance and characteristics of each asset, and avoid putting all your eggs in one basket. 1. For example, if one asset goes down, another one may go up, and balance out your losses. 1. Diversification can also help you achieve your financial goals, by matching your risk tolerance and time horizon with the appropriate asset allocation. 1. For example, if you are young and have a long-term goal, you may want to invest more in stocks, which have higher potential returns but also higher volatility. 1. If you are older and have a short-term goal, you may want to invest more in bonds, which have lower potential returns but also lower volatility. 1. To diversify your portfolio, you can use various tools and platforms, such as robo-advisors, index funds, or exchange-traded funds, ETFs, which can give you exposure to a wide range of assets with low fees and minimum investment requirements. 2. Do your research, and find undervalued or high-potential investments that can give you high returns in the long run. 2. Research is the key to finding good investments that can generate portfolio income for you. 2. You need to do your homework, and analyze the fundamentals, trends, and opportunities of each investment, before you buy or sell. 2. You also need to keep yourself updated with the latest news, data, and information that may affect your investments, and adjust your strategy accordingly. 2. By doing your research, you can find undervalued or high-potential investments that can give you high returns in the long run. 2. Undervalued investments are those that are trading below their intrinsic value, or their true worth, based on their earnings, assets, or growth prospects. 2. High-potential investments are those that have strong competitive advantages, innovative products or services, or loyal customer bases, that can lead to future growth and profitability. 2. For example, you can use various tools and platforms, such as stock screeners, financial websites, or podcasts, to find and research undervalued or high-potential investments. 3. Reinvest your income, and use the power of compounding to grow your wealth faster. 3. Reinvesting your income is one of the most effective ways to increase your portfolio income and grow your wealth faster. 3. It means using the money that you make from your investments, such as dividends, interest, or capital gains, to buy more investments, instead of spending or withdrawing it. 3. By reinvesting your income, you can use the power of compounding, which is when your income grows exponentially over time, as you earn income on your income, and so on. 3. For example, if you invest $10,000 in a stock that pays a 5% dividend annually, and you reinvest the dividend every year, you will have $16,289 in 10 years, $26,533 in 20 years, and $43,219 in 30 years, assuming no change in the stock price. 3. But if you don't reinvest the dividend, and just keep it in cash, you will have $15,000 in 10 years, $20,000 in 20 years, and $25,000 in 30 years, assuming no change in the stock price. 3. That's a huge difference. To reinvest your income, you can use various tools and platforms, such as dividend reinvestment plans, DRIPs, automatic investment plans, AIPs, or robo-advisors, which can help you reinvest your income automatically, without any fees or commissions. So, now that you know how to increase your portfolio income and make more money from your investments, how can you leverage it and use it for financial success? Well, there are a few ways to do that. Here are some of the best ones. 1. Manage your risk and return, and optimize your portfolio performance. 1. Managing your risk and return is one of the most important things you need to do with your portfolio income, as it determines your portfolio performance. 1. Risk and return are two sides of the same coin, as they are both related to the uncertainty and variability of your investments. 1. Generally speaking, the higher the risk, the higher the potential return, and vice versa. 1. By managing your risk and return, you can optimize your portfolio performance, which means achieving the highest possible return for a given level of risk, or the lowest possible risk for a given level of return. 1. To manage your risk and return, you can use various tools and platforms, such as risk-reward calculators, portfolio analyzers, or portfolio optimizers, which can help you measure and adjust your risk and return, based on your goals, preferences, and constraints. 2. Protect your assets and income, and plan for the future. 2. Protecting your assets and income is another thing you need to do with your portfolio income, as it ensures your financial well-being, and prepares you for any unexpected events or challenges that may arise. 2. By protecting your assets and income, you can avoid losing money or income, and preserve your wealth for yourself and your loved ones. 2. To protect your assets and income, you can use various tools and platforms, such as insurance, tax planning, or estate planning, which can help you secure your financial assets and income, and reduce your liabilities and expenses. 3. Achieve your financial goals, and create your financial freedom. 3. Achieving your financial goals is the ultimate thing you need to do with your portfolio income, as it creates your financial freedom. 3. Financial freedom is the state of having enough money and income to live the life you want, without having to worry about money. 3. By achieving your financial goals, you can create your financial freedom, and enjoy the benefits of your portfolio income. 3. To achieve your financial goals, you can use various tools and platforms, such as goal-setting apps, budgeting apps, or financial advisors, which can help you set, track, and reach your financial goals, and create your financial plan. So, there you have it. These are some of the best ways to increase your portfolio income and leverage it for financial success. As you can see, portfolio income is a vital tool for building wealth, and you need to make the most of it. By following these tips and strategies, you can boost your portfolio income and achieve your financial goals. Thanks for watching, and I'll see you in the next video.